Hi friends, I'm CA Shirish Pade, and today I'm taking you through the introduction part of this chapter on auditing in ERP environment for the advanced IT course. Folks, welcome to an amazing world of auditing in ERP environments. It is extremely exciting. I just want to take you back into time during your college days when you were taught manual accounts, how the entries flowed. There were primary books of accounts, there were secondary books of account from which a trial balance was derived, from which flew the financial statements. Through articleship, we evolved through that, and probably our understanding came even better. Subsequently, even during earlier years of practice, I have gone through environments where even huge companies had accounts that were written manually. And there's nothing incorrect about that. There was no other way. We had giants having accounts which were written manually. And there was something which was called as a trial balance. Why? Because it mostly would never tally, first instance. Unfortunately, think about it, even today, in ERP environments as well, we still call that output as a trial balance. We had specific people, identified people in organizations as well as with the firms of chartered accountants who specialized in tallying the trial balance. So there were tricks of the trade. For instance, if the debit and credit, the difference, if you total up the digits of the difference and that total was exactly divisible by 9, then there was probability that some digits got interchanged while posting. But these tricks of the trade are lost to time, maybe rightly so. So a time came when computerization was on its way. We did have initial standalone computers from which we got the hard books of accounts printed anyways, and we used to audit those accounts and tick them the same way. The green tick for the stat audit, the red tick for the internal audit, to do the posting, to close out. So the audit was wholly substantive, although the printouts seemed far more cleaner than the written accounts. The only advantage probably was in most scenarios the trial balance would be tallied, but that generally did not alter the procedures for audit. Then came a massive revolution, and that was the ERP per se in accounts. So when the ERPs came in, it was multidimensional, it was multi-modular, all integrated into one, and the concepts of obtaining printouts became rare. And with huge things, the first time I saw an ERP where the client was very hesitant in giving printouts, we did not know how to conduct an audit. Folks, that was a dilemma to say how do we conduct audit in huge ERP environments where things are extremely complex. So folks, this is me at a confused state of mind. Just when I had found all of life's answers, they changed all the questions. That's right. And the world of auditors has changed completely. I need to reinvent myself. I need to re-understand how audit needs to be done in ERP environments because the rules of the game have completely changed. There was so much discomfort at the back of our mind when accounts started getting computerized. As to we had no visibility on what was happening from the time the data entered the system to the time the data, we actually got the reports for our audit. There was discomfort. The concepts of systems audit was not very much in vogue. It had probably just started finding roots. In fact, there were times when we had to think back how to give an opinion based on outputs from systems which we had not audited. So as I said, life for auditors changed completely. So folks, before I proceed, let me explain to you what has changed in the accounting in ERP environments before we touch audit of the ERP environments. In ERP environments, as theory goes for all accounting entries, technically all entries are journal entries. There are no primary or secondary book of account. There is data only stored in tables. So once there is a screen layout, you pick up a debit figure, you pick up a credit figure and an account, and once you post, the entries flow directly into those tables and the tables are populated. So there is no posting from primary to secondary book of account. So the so-called primary books of accounts, if we ask for those primary book of accounts, they are not primary books in the true sense, but they are actually extracting data from tables where the data has already been stored. So if I want a purchase register, a report is written to say, pick this thing from this table, pick this thing from this table, print out in this particular format, and that's the register we get. So to get purchase vouchers and tick from the purchase vouchers posting to the purchase register, it doesn't make sense at all because you would never ever find a difference. The data has come from the same tables. And this distinction needs to be very clearly understood by us all. To say again, repeat this, there are no primary or secondary books of account. If at all, you can call the ledgers as secondary books of accounts, there is nothing primary. Folks, it is extremely difficult. It is extremely tiresome and time consuming to do substantive audits in ERP environments. First of all, there is absence of printouts. Printouts are very rare to come by. How do you audit? It's very difficult to do ledger scrutiny because the printouts are not available. Ledger scrutiny is one of the most critical things of audit finalization. Third, how do you audit manual entries? We will have a separate session on manual entries, but conceptually, unlike the manual books of account, there may not be only one type of transaction having manual entry, and that even there may not be a maker checker to control these entries. Journal entries are clearly fraud risk. Journal entries are clearly risk of management override of controls. And this is hypocritical. I mean, how do you do audit when you have no control virtually on assessing journal entries or doing ledger scrutiny in a traditional way? Consider the other aspects. There is increased use and complexity of systems and applications. It may not be just one application. There could be so many applications which are interacting with each other. There could be hundreds of applications talking to each other. How do we audit something like that? Some industries which are very hyper IT dependent, such as telecom industry or banking industry or e-commerce industry, where everything tends to be extremely well knit integrated into IT, and there is a huge dependency on IT for all its transactions. Transactions also nowadays are extremely high, very high. The systems, especially for global companies having units in India or abroad, applications could be hosted across the globe. A system hosted in Switzerland, managed from Hong Kong. how do you consider and audit something like this? The outsourcing story has just begun, and so many organizations have processes outsourced to other entities, to third parties. How do you control and assess something like this? And with competition, there is clearly need for efficiency and effectiveness of audit. So folks, auditing in ERP environments, doing it substantive way, is extremely difficult and time consuming. So is there any alternative to substantive audit? Fortunately, yes. Fortunately, there is a way. You could rely on controls implemented by the management, the controls which the management is relying on. So typically in an IT environment, you could, if you assess appropriately, rely on automated controls, rely on automated accounting procedures, rely on system-dependent manual controls, and rely on underlying data. And here, this is what is called a controls-based approach to audit. This is relying on the controls which the management has implemented after appropriate assessment. So let us dwell upon this appropriately. Let us understand first the types of controls which the management would have implemented. The first bucket is clearly the manual controls. Manual controls are those controls which require a sign-off. A paper, there is some sign-off on the paper. This is one of the manual controls. You could have automated controls and automated accounting procedures which are completely system dependent. By automated controls, I mean configurations. Configurations for a three-way match, configurations for tolerance limits, and such other controls which are built into the application. By automated accounting procedures, I mean those automated entries which are passed after the events are appropriately triggered. So these automated accounting entries are populated in appropriate tables based on configuration set. And the third bucket is system-dependent manual controls. So these are manual controls. There are sign-offs, but the sign-offs are dependent on reports generated from the IT system. So before we understand how to rely on these controls, let us first understand what are general IT controls. So general IT controls, which are sometimes referred to as IT general controls, sometimes often referred to as general computer controls, have the following definition. So technically it is controls other than application controls which relate to the environment within which these application-based control systems are developed, maintained and operated, and which therefore are applicable to all applications. So these controls are all pervasive. They apply to all the environment in the IT. So what are these controls? So if I look at IT controls, I can divide them into two parts. One is the application controls, the controls at the application level, be it SAP, be it Oracle Financials, PeopleSoft, or other controls which can be inbuilt into the application. Anything else, any other control falls into the bucket of general IT controls. Any application will be sitting on an operating system. It will have a database. It will have networks. There will be procedures to handle user management, user creation, user modification, user terminations, periodic review of access rights. There could be procedures for change management, emergency changes. These are the controls. These are the controls on which the application is residing on. This is the infrastructure on which the application is sitting. So again, to rephrase this, the controls on the infrastructure on which the application is residing is called as general IT controls. When I want to assess and rely on application controls, first I need to assess what is general IT controls. Because if my infrastructure is sound, if my basis is sound, if nobody could have gone to the backend and changed programs or data in an unauthorized way, then and then only can I go ahead and rely on application controls. So no matter how expensive the software, no matter how good the software, no matter how user-friendly the software, no matter how extensive the software, no matter how good the application controls, if somebody could have gone to the backend and changed programs, data or controls from the backend, then the controls at the application level are pointless. I think this needs to be understood very, very clearly. In order to rely on application controls, the foundation, the infrastructure has to be strong. And this is what we refer to as general IT controls. So, at first layer, we would end up assessing general IT controls. And if general IT controls are significantly found deficient, if they are inadequate, it means that the auditor will not be able to rely on automated controls, automated accounting procedures, system-dependent manual controls, or the underlying data, because there is no control on what changes could have happened from the backend. In this scenario, the only option is to do a substantive audit, and you could probably rely on manual controls, and all this, as we discussed earlier, is extremely challenging and taxing. The question is, are we mandated in some way to understand the IT environment? And the answer is clearly yes. The institute has come up with SA 315 some years ago, which talks of identifying and assessing the risk of material misstatement through understanding of the entity and its environment, which includes the IT environment. Some of the requirements are that the auditor shall, in addition to other procedures, obtain understanding of internal controls, obtain understanding of information systems, including related business processes, obtain understanding of how the entity has responded to the risks arising from IT, obtain an understanding of the entity's controls over risk of inaccurate or incomplete recording of transactions in highly automated processing environments. So this is mandated. This is the starting of the audit. SA 315, when you gather information, that forms the basis for further evaluation and planning for the audit. This is the starting point for the audit. If these procedures are not carried out, we are probably not complying with SA 315. Further, SA 330, auditor's response to the assessed risk. So, based on what you have understood in SA 315, you have to consider the effectiveness of IT general controls to plan other procedures. So, you need to respond to the risks you have identified in SA 315. A new essay coming up, SA 701, communicating key audit matters in the independent auditor's report. This begins after 1st April 2018, but we need to understand the standard very clearly. The whole format of the audit report is undergoing change, and we need to state in the audit report key audit matters or KAMs. The auditor is expected to take into account the effect of the audit of significant events or transactions that occurred during the year, which includes those relating to IT systems and controls. So you see, there could be a key audit matter if something significant has happened which has impacted the audit from IT perspective. Plus, there is a requirement to have insights of the auditor's assessment of the quality of internal controls and their significant risk assessment. Also, explanations of changes to the audit approach or risk assessment. So, if your audit approach toward planning is to rely on a controls-based audit, and because of deficiencies identified subsequently, you want to do substantive audit, this change to the audit approach may need to come out in communicating as key audit matter to the shareholders in the audit report. You are aware that there is a new reporting requirement in India which requires an auditor to give an opinion on internal financial controls over financial reporting. This is laid down in section 143(3)(1) of the Companies Act 2013. And because the whole world is so much dependent on ERPs and the ERP depends so much on, wholly dependent on IT, that is why controls on IT, whether they are general IT controls or whether they are application controls, are extremely critical for us to assess, and we need to give an opinion on the same. Just to say that recently there have been some exemptions granted for reporting on for some small companies, etc., which is displayed in this slide. But this does not mean that we can't have a controls-based audit. This exemption is only for reporting on internal financial controls over financial reporting. We can still go ahead, and it is suggested we go ahead and assess general IT controls, assess application controls, rely on those controls for giving an opinion on the financial statements of the company. So, to dwell further into how to assess ERPs, it is extremely necessary for us to understand how to access ERPs. We should never ever access production or live environments with insert, edit or delete rights, because even by mistake, some things could go wrong with the system for which you could be held responsible. You should be logging in for getting all the extracts and all the configurations only with read-only access. You should insist on obtaining only a read-only access. In some scenarios, if access is not provided to the production environment, you could also get access to the test environment. But the proviso is that you should be very sure that the configurations and the version of the application code in the production environment is exactly equal to the code in the test environment. Just to rephrase this, that in every ERP there are at least three systems. One is the development system, the second is the testing system, and the third is the production system. If you don't get access to production, you could test in test environment, but you should be sure that the version of the production environment is exactly equal to that of the test environment. And this could be done, one of the ways is to clone the production environment on test environment in presence of the auditor. Also to say that super user access, privileged access is not required for the auditors. The auditor should request only for temporary access, only for the duration of the audit. And as we said earlier, read-only access is only. To obtain data from core technology components such as screenshots of operating systems, databases, etc., you should take help from the respective system administrators and not touch live environment directly. Bottom line is, the auditor should not even inadvertently violate the company's policies or compromise on IT security. I think these ground rules need to be very, very, very clearly understood. One of the matters for debate is who owns IT. And clearly, there are two people who have interest in IT. There is the IT team which owns the application, and there is the business team which owns the data in the application. So ideally, the roles of both the teams should be segregated and should not overlap. Otherwise, we have a conflict of interest, conflict of duties. Also, it means that communication lines are strictly drawn between both the teams to maintain integrity of data. If we look at this diagram, the Chief Information Officer or the CIO or the head of the IT should be reporting directly to the Board of Directors. The Chief Finance Officer or the CFO should also be independently reporting to the Board of Directors. The CIO is the application owner. The CFO is the data owner. There needs to be communication between both the teams. Now there could be other scenarios as well. If the CIO is reporting to the CFO, there could be additional controls, and we need to assess this information when we start the audit. Look at the other challenges that we have in ERPs, and these challenges need to be understood very clearly. The way data is extracted from ERPs is distinct. It could be extremely complicated. It could vary from ERP to ERP. It could require tools, specific identification of which data out of millions of tables needs to be extracted. All that knowledge base is required. The data may stop extracting if some buffers are overflown. So we need to know that there are issues on how to extract data from the system. We need to understand that each ERP installation is unique. If you say there are 10 SAPs installed in 10 of your clients, none of these is equal to the other. Every installation is different. Also, ERPs generally have child installations. So there is a subset of an ERP probably catering to each legal entity. Every setting at application level for each child installation, which is part of the big ERP installation, could be different. Although the general IT controls for all the child installations for one ERP installation may be common across board. We all need to understand that first year audits are very difficult. First year assessing general IT controls is very interesting, and it could throw out many issues which we need to discuss with the management, get an agreement, and then move on. In the years now, for the last few years now, we have not been having concepts of parallel runs. So a ERP is implemented and there's a parallel run for some months is, I think, things of the past. There are no parallel runs. To suddenly start another ERP and move on. The huge challenge is management's perception that the ERP does it all, which is completely not true. ERP will work the way it has been designed and configured. It has been configured appropriately, it will work appropriately. If thought has not gone appropriately into the design, it might end up becoming a disaster. Also, the challenge is on audit work papers, how to get evidence from the ERPs to put on our audit files as appropriate audit evidence. I think all of us need to understand and digest these other challenges in auditing ERP environments. Let us refer to SA 610 using the work of an auditor as expert. Let us understand bottom line that we all cannot be expert in all technologies around the world. Even the best of the IT technical experts may not know all the technologies or all the inner parts of every technology. So when we don't know and we still need to leverage on what is with us, it is extremely important and appropriate to involve people who know, involve experts, involve engineers, involve people who understand what we are talking about, get their help in assessing those controls, their impacts on the audit, etc. The message is very clear. If you don't know, please get the help of experts. It will help you deliver value. It will help you give an appropriate audit opinion. This course has been devised to help you people understand what are the risks that an auditor faces when we audit ERP environments. As you know, there are several ERP applications floating in the market. There are several applications developed in-house. Each application will be different. This course is not meant to make you experts on every ERP. As I said, this course is to give you a flavor of what risks you need to understand while auditing ERPs, and you will need to evolve on that. All the screenshots, all the other information in the entire course content is not related to any specific ERP, but it is a knowledge base for you to evolve further on specific ERPs. Let us have a recap of the objectives of this session. First is to understand the requirements of SA 315 and SA 330 relating to IT and audit in ERP environment. To understand the types of books of account in an ERP, to understand controls-based audit, to understand the difficulties in performing only substantive audits in ERP environments, to understand the process of access to systems relevant for audit, to understand the use of experts in an audit. I think we have dwelled through in at least some form of detail to impress upon you the background and the overview before you start auditing any ERP environment. Wish you a very happy learning and all the best. Thank you.